Welcome back. The focus is on the IT sector. Now, the picture from the IT earnings up until now, and we've got quite a few of them, TCS, Infosys, Wipro from the mid-cap end. We've got numbers from Mindtree, L&T Infotech, L&T Technology, Cyient, Tata Elxsi, and the picture is the same. The revenue growth has been exceedingly strong, much stronger than what the street was anticipating. But on the margin side, on the availability of digital talent to meet the demand, to complete the projects has been on the tighter side. Attrition has been rising across the industry. And companies are focusing on employee retention programs, on giving higher variable pay, and that is denting the margins. The stock has seen a phenomenal run-up. Most of them are up a fair bit. Names like Wipro are up 10% so far this week. But today, of course, we have come in for some amount of profit booking. Let's delve a little deeper into the sector and find out how the value versus valuation arguments stack up. Now, Sudheer Guntupalli, the lead analyst technology at ICICI Securities, joins us on the show now. Sudheer, morning. Let me start with Wipro. It's seen as a turnaround candidate. The numbers for the last 4 quarters have looked good, which further lends credibility to the company's turnaround journey progressing well. Your thoughts on the stock, the numbers and the valuations right now?
Sure, Rima. So if you look at the last 4-quarter numbers, unfortunately, we'll not be able to build a constructive picture out of the 4-quarter numbers that you're talking about, given that there are multiple distortions due to COVID. Firstly, in the September and December quarters, we have seen a sharp recovery from the low base of the June 2020 quarter. And even after that, we have been seeing different verticals and different segments reacting and recovering differently in different ways, right? So if you look at overall picture of COVID and the dip that we have seen in June 2020 and the subsequent recovery that has been playing out, there is a heterogeneous or a non-standardized nature of recovery we are seeing across different verticals. So if you ask me, going by the last 4 quarters data, I would not really conclude that we are seeing a turnaround at the company level. Most of the companies across sectors have seen that sort of a recovery, have seen that sort of a bounce back from June 2020 lows. So the bigger question that we'll have to ponder about is whether we are coming off a cyclically low base and it's a reflationary sort of a growth that we are looking at, or we are looking at some sort of a secular growth. I think we have to, await some more data. We have to await and see a few more quarters to actually come to a conclusion that the company has seen a turnaround. The second point I would like to highlight is if you exclude Capco and Metro acquisitions, captive takeover of Metro and Capco acquisitions, a company's organic growth has been in the range of around 2.8% in June quarter. As I have been highlighting in earlier forums also, this is a typical June quarter growth for the industry. Of course, for Wipro, it is slightly higher, compared to Wipro's historical averages. But if you look at industry growth rate, it is pretty much in line with the industry growth rates. So I would be little cautious about extrapolating the last 3-4 quarters data as a structural turnaround or a secular growth. And I would await further evidence to see if it is not actually, if it is or if it is not a cyclical kind of a recovery from the low base we have seen in June 2020.
Sudheer, what about Cyient? I take your point that it is amongst the cheapest mid-cap IT names. It's trading at sub 20 times FY22 PE at a time, when most of the mid-cap IT companies are trading at 30 times and more. But then that is for a reason, right? The revenue growth has been pretty weak for the company. I think in last 7 quarters, the company has reported negative growth in 4 of them. So, in that context, why are you bullish on Cyient?
Sure, Rima. So the first point you should note here is the differential seasonalities that different companies exhibit in any particular quarter, right? Historically, June has been a negative seasonality for Cyient because of the design-led manufacturing business. So that is something we need to keep on back of our mind when we are comparing this company's numbers with most other companies' numbers out there. And out of the 7 quarters that you're talking about, I'm sure that the industry has also been seeing decline. Let's say starting from March and June, the industry has also seen a decline. And ER&D industry is a bit slow. ER&D has been lagging IT services in terms of recovery. So most of the ER&D players, have lagged the IT services companies even in the September quarter. right? So this is the only aberration. This June quarter is the only aberration we are talking about compared to the rest of the industry. If you are comparing like to like Cyient with other ER&D companies. And the second point, as I said, there is a peculiar seasonality that the design-led manufacturing business has, because of which the company reported decline this time. Secondly, you should also keep in mind that 10% of the employee base of the company at one point in time were impacted due to COVID, and the fungibility of resources in ER&D is not as good as the fungibility of resources in IT services. That's another reason why the company has seen a problem in this quarter. But the key to note here is that despite these problems, management is optimistic about full year outlook, whatever outlook they have given in terms of growth and margins earlier. They continue to stand by that outlook. And I definitely believe that there is an upside risk on that estimates also, both in terms of revenue growth outlook and in terms of margin outlook. I believe there is an upside risk in the case of Cyient. As you highlighted, valuations have been undemanding at around 16 times when we are looking at most other mid-cap IT names trading almost in line with consumer companies. So the way we look at it is it's a good value trade-off that we are looking at for the 11 to 12% sort of growth that the company may deliver in steady state after this base effect, after this recovery from cyclical low is over. We are essentially paying 15-16 times, and there is a good amount of scope for margin expansion also in this company. So earnings can surprise on the positive front. We are talking about 15 to 20% sort of earnings growth. Stock is trading at 16 times. PEG ratio is slightly lower than 1. So that makes us positive on Cyient.
Sudheer, hi, good morning. I want a broader view on IT as well in terms of what your overall top bets are now that we've seen a lot of results. But before that, just want to ask, do you track Happiest Minds, Sudheer?
So it's we don't have a formal coverage, Prashant, on that. For our internal consumption, for our internal study, we track the company, but we are not supposed to make any public dissemination on that name.
Right. No, can you talk broadly on around it without going into a specific recommendation?
Sure. So it's a if you look at the scale of the company, it's at a very small scale right now. So the growth rates tend to be little misleading, either on the positive side or on the negative side. The reason I'm saying that is at a small scale, companies usually struggle a lot to get across the table with clients and to get deals, to get invited for bids and all. So from that standpoint, it's a negative also, but mathematically the small base also gives you an advantage in terms of reporting higher growth. So both these things are there when you're talking about any of the small cap names like Happiest Minds. But this is a niche play, given the exposure, given their capabilities in the infrastructure services and security segment, or their strength in product engineering services, or in some of the niche verticals where the larger players don't operate. For example, the likes of EdTech, etc. This company has very strong credentials. This company has very strong referenceability. So overall, I would leave you with the broad thoughts that this is a strong player operating in a particular niche. So the runway to growth may be very strong, and without actually getting into any forward-looking estimates or forward-looking valuations, I would leave it that.
Sudheer, as I said, what are your top bets in the sector now?
Yeah, sure. Prashant, as we have been highlighting across the large cap names, we continue to bet on Infosys. Across the mid cap names, we continue to bet on L&T Infotech. And across the small cap names, we continue to bet on Cyient. I think Cyient we discussed already. Infosys and L&T Infotech, I would highlight one point. These are the two names. One thing which is common between Infosys and L&T Infotech is that these are the two names which are actually reporting stronger demand momentum, actually reporting stronger growth momentum after COVID compared to what they were reporting before COVID. I think this is a key nuance that investors should keep in mind. The reason I'm highlighting this in particular is because of that most other companies we are seeing today, either large caps or mid caps, they are reporting optically high growth rates, optically strong growth rates, only because of the fact that they're coming off a very low base. So it's essentially a cyclical recovery from a low base, a cyclical recovery from the dip we had seen in June quarter. And investors should be little cautious in terms of extrapolating it to medium-term or long-term secular growth kind of a construct. But if you look at Infosys and L&T Infotech, even if you adjust for the base in the previous year, right, Infosys would have delivered around 5.5% CC growth in FY21. L&T Infotech would have delivered around 11-12% CC growth in FY21. So even if you adjust for the base in FY21, these two companies would have reported very strong growth on a CAGR basis also, compound annual growth rate basis also, over a period of FY20 to FY22. That gives us confidence that these two companies are actually reporting stronger underlying demand momentum, underlying growth momentum, versus, let's say, most other companies reporting just coming off a cyclically low base and accordingly growth rates appearing misleadingly high.
Sudheer, it's a pleasure. So large cap pick Infosys, mid cap pick L&T Infotech, small cap pick Cyient. Essentially, those are the things that Sudheer is recommending to his clients, institutional clients, basically. Let's listen to some management commentary as well. So this is the